The amount of money I'm putting into a property deal and getting £250 a month, £300 for cash flow, I can go and buy a business that gives me £500,000 profit. So would I buy the income now of £500,000 and then reinvest that into maybe commercial property or something else? Or do I put the same money into this business, I guess £300 with a headache tenant?
Welcome back to another episode of the Momentum Invest podcast. My name is Joel White. This podcast has been brought to you by TFG Capital and Ramsey White. I'm with my co-host, Will Roberts, and we're joined today by Dee Ludlow. So, Dee, welcome to the podcast.
I appreciate the invite, guys.
Awesome.
Right. Yeah.
Dee, we've been following you for a while now at Ramsey White. We love property, we love business, we love finance, we love working with entrepreneurs. I know you've mixed in all of them areas with now a real focus on mergers and acquisitions, buying businesses, selling businesses. I know you've got a lot of experience in that place, and also you're helping others in that sector as well. So do you want to give us a bit of an overview of, what your businesses are, what you're doing at the moment, and who Dee Ludlow is?
Yeah, so our main focus realistically is to buy a platform in a certain sector. We were very agnostic at the start. Now we're a lot more focused, sector specific. We found good operating partners in each sector, which allows us to buy in multiple sectors. But that's from e-com, nutraceuticals, construction, and hair and beauty now as well, actually. So there's probably a few others I can't think. But yeah, realistically, of course, you don't want to try and chase too many rabbits because they'll all escape, right? But that's why we're trying to niche down a little bit more now. Because of the group and because we're helping others, a lot of people bring deals to us, which you don't want to get the shiny penny syndrome then as well. So yeah, but in short, we have like a holdings company or like a parent company, and then from there we invest in various different sectors.
Got a lot going on then.
Yeah.
How do you manage your time sort of day to day across all the different businesses?
I think that's where it comes down to people. It's really important to have the right people because probably up until maybe the last 18 months has been different, but before that, yeah, it was very hard because you don't have the right people. Regardless of what people look at, regardless of how artificial intelligence is growing and just tech and automation, you still need people, right? As of right now, you still need people. Without people, nothing happens. So it's because of people.
How do you find the right people when you're looking to set up new business ventures? How do you know they're going to fit into the culture? Not just going to turn up, take all your knowledge that you've got and then leave and create their own business.
It's always a challenge.
Yeah.
I think that the thing is, let's say we was to buy, let's say we was to buy your business and you're like, we've got a great management team.
Sold. Done.
Yeah.
That's why I got you here.
Yeah. And you're like, look, we've got a fantastic management team. And you're like, well, Joel doesn't play much role in the day-to-day. There's no key man dependency here. We've got a solid team. Now, there's only so much organizational due diligence you can do on that team because the owner doesn't want you to go and talk to a lot of them team. Maybe there's like a number two where they're like, you can speak to this person and then maybe you can incentivize them with rollover equity or some equity options or something in the business. But there's always going to be an element of risk to that management team, and not because regardless of how good the culture is, when there's some sort of change that could affect the culture, there could be some sort of material impact to the business. So finding people's really hard. And like, for instance, when you're recruiting, it's the same as I always say, it's like a first date. Everyone turns up as their best self to an interview. They tell you everything they want to hear. And then it's like 3, 6, 12 months down the line when the honeymoon period's over, then the real person, you start to see what they're like, and whether that's for good or bad, really. So it's really hard to recruitment now more than ever has been hard.
Do you think it's like, so when you're acquiring businesses, are you looking to be hands-on within the business, or is it looking for more of the right leadership team to give them direction? How do you look at that?
Yeah, so we don't like to be very hands-on. We like to look at mainly because when you're in, probably you understand it, there's some things you just don't see when you're in it every day. No matter how much business acumen you have, there's still things you're going to miss because it's hard to manage everything at once. So we prefer to take an overview, look at data more than anything, and then get the feedback from the data. Because let's say you had a sales department and service department, service department's down, say 20% this week from target, you can make a phone call and be like, what's going on? You're down 20%. It looked from, like say, the booking system, wherever you can hit target this week. And it could be something as easy as, we're down, we've got 2 staff members out this week and they're off ill. And all of a sudden it's like, okay, cool, you couldn't fulfill on some of the work. So the data tells the story, but I'd rather look at the data first and then take a look at what's actually going on within the business. But it depends on the deal. So where we're growing now, fortunately we have good operating partners now where we can be more hands off and we can take more of like a consultancy role in the business or like a non-exec role. But there's one that we're working on now that we're looking to just, if it comes off, then we'll go, and that's in the States. But it'd be worth doing because of the way we've structured the deal. We've already been over there twice. We went over there last year for initial conversation with them, and then in April this year we went to spend 10 days in the business to see what value we could bring to the business. So it's a bit of a long story with it. They was looking first for investment. We was going to help them with it. It was just to facilitate the purchase of a building, and then based on helping them with that, we was going to try and get equity in the business. They've grown massively over the last 5 years, and then they went and did that themselves. But then they're like, well, actually, can you help us? So we actually was working with a private equity firm in the States that my business partner had exited to previously, and they said they would acquire the business. So we're just going to try and broker the deal, take the spread in the middle. Yeah. They seemed happy, and then they're like, actually, no, we don't want to sell yet. Why don't you guys come in and make us more sellable, and then we can sell it for more? So that was what we initially talked about. We went over there, showed them what we're going to do. So now we're going back and forth on how much equity we want, what retainer we have for that. But we've, sort of pre-agreed the exit already. So it's like we've taken some risk off the table, providing we do hit those KPIs that we've set in place to make sure we do them. And, we wouldn't obviously say we could do it if we couldn't. I believe we can do it. But for something that size and based on this like real consult for equity, hands-on for at least 3 to 6 months as a minimum, we'd all have to go there to do it. But obviously the upside's so big, it would be a no-brainer to do it. But mostly we try and take a hands-off.
I think that's the great thing about business. The opportunities are almost endless in that regard. Like they were moving towards one part. Okay, we can exit actually, but they've reviewed it, and like maybe with your help and support and guidance, they could take it to another level. And I think it's endless in that regard. What I'd like to know is like a lot of people start companies, some scale and some manage to sell. Not a lot of people do. Like I think 90% of businesses don't even get to £1 million, turnover, and then a few more afterwards get to the 10 million, and then it's very few after that. And then even in the first 5 years, a lot of businesses don't succeed. So to be in a position to be buying businesses and in that space, what journey have you been on to like get to where you are now?
A lot of failures. So when I first left school, my dad was an IFA. He said, I was 16, he said, come in, do your CMAP, go from there. I think it was called FPC 1 and 2 back then or something like that for the other exams. He said, then, this is the journey you should go on. So I started studying for my CMAP. I went on a client meeting with him, and the client was really direct with me. He's like, so this is what you want to do, right? I was like, yeah, I think so. And he said, well, just so you know, until you got some hair on your face, I'm probably never going to I would never trust you with my money. So it sort of put me off a little bit. So I was like, I don't know when I'm going to start growing facial hair. Hence why you got the beard now. Yeah. They take me serious, so I got a beard. So it just, even though it's just one person's opinion, at 16, emotional intelligence isn't really that big at the time. I just sort of took that as a dig, got defensive, and it put me off then. I thought, I can't wait. I could be 25. I can't wait 10 years almost to start earning good money. That's what I thought, so then I thought I need to start a business. And I'd already done like, when you're like in school, and we did this thing in the summer holidays where we went and like cut like pensioners' hedges and grass. And I've seen that you could trade your time for money first and foremost. So I was like, I'm just going to go back to doing something like this. So from there, I've probably done a dozen startups. Most of them failed. We managed to, I sold my share in the one, then we sold the other it's a small group completely. And I was like, okay. But then my goal was always to do property at the time, which I've changed. I changed my mind on that. But again, back to with my dad, he took me to a Rich Dad, Poor Dad seminar when I was like 14, 15.
Yeah.
No redemption mortgages, credit card deposits back then, Wild West.
Yeah.
So I'm like, I'm going to do this at some point. But I still had this idea in my head of, I need to, a facial hair, I need to grow up a little bit. And, I need to just get older before I do these sorts of things and make bigger moves. So then for some reason, I took my whole eye off the ball. All that business acumen I had built up from making mistakes, because a lot of the stuff I could teach someone, this is how you do this, this and this, but a lot of the real learnings come from the experience, because it's hard for me to, for instance, let's say you used to buy a business. I know I'm going off on a tangent here, but if I was to say we're going to buy a business and it has like £500,000 in HMRC liabilities.
Yeah.
Now, most people will be like, I'm not buying that. It looks like they don't know what they're doing. True. That is the truth. But there's things that you can do there to negotiate with HMRC and certain things. So my point is stuff like that. If I just said to you, look, this is what you can do in this situation, most people would be like, why are you telling me this? So a lot of the stuff you learn through experience. So luckily, at the time, I didn't feel lucky, but luckily at the time, a lot of that experience through doing things the wrong way, I managed to pick up. And then, that's without me going into the rest of the story properly, because I'm sure we'll come on to it. But yeah, that's where I felt that I had the confidence to then. And back then, I had bought some businesses, but not in the way I do now. It was just more of I can buy something because it looks like a discount, and then we can flip this out. So it was just a learning curve.
Yeah, you mentioned you changed your mind on property. What do you mean by that? So obviously you've gone into business acquisitions. Why did you decide to avoid property and go into...
So I was in business first, right? And then I always thought I'm going to buy property. And because of business, when you're building a business, you're constantly reinvesting, constantly. And because I had more than one startups as well, it was just draining money all the time, and you're just really optimistic and you're like, this is going to work at some point. Yeah. And then as the months go on, that optimism starts to get less and less, but you're still throwing money at it. So all my capital was tied up in various different startups. So I thought, right, I'll take the plunge. I'm going to do property. Just going to get into it. So I felt that I'm now in this very capital intensive business model of property where I was doing buying buy-to-lets, where I'm putting all this money in, using investors' money on my own, and then providing everything goes to plan. So I buy right, the schedule of work you put together, and obviously the value added into the property, providing that all goes right in the middle, and make sure you've got a good contingency plan in place because things go wrong. And then providing then the GDV comes in at what you think is going to come in at, and then everything else goes right, the economic environment's all okay for you to pull that money back out, then okay, you be able to pull this money out, or all of it or some of it, and then you're left with a couple of £100 cash flow. Now, in the grand scheme of things, the long game, fair enough. You can, if you buy in the right areas, you get that capital growth, and then over time you add units, and hopefully you got good tenants. But I was like, the amount of money I'm putting into a property deal and getting £250 a month, £300 for cash flow, I can go and buy a business that gives me £500,000 profit. So would I buy the income now of £500,000 and then reinvest that into maybe commercial property or something else, a bigger play? Or do I put the same money into this business, I guess £300 with a headache tenant? To me, it just didn't make sense.
One boiler failure and suddenly that money's gone.
Yeah, anything that has a single point of failure is a problem.
Yeah.
And business and property are both underpinned by people, regardless. One's underpinned by tenants, one underpinned by staff and customers. Which one would I prefer? For me, the trade-off is the risk reward is ridiculous for me to even consider the one over the other.
Yeah, makes sense. I get that completely. I think that, and I know you've seen in the market the interest rate rises, and people think that it's just always going to be one way. Now, if they're being, like, we work with a lot of entrepreneurs, business owners who are more creative in that property space and doing fantastic deals, but they've got to go and get that skill set knowledge to go and, either raise capital or find deals, or, there's permitted development changes coming in and they're already ahead of the curve. So they're kind of got that first wave coming in and they know how to take advantage of it. But I think there's people behind the scenes who are just hoping for that £200 to come in, and then, oh shit, a boiler's like failed and now I've got to pay for that, and they leave them out of profit. What's the point being in business if you're not making money, right? In terms of the point is to make profit, and stay in business. what kind of, seeing the opportunities and going into business and you're seeing the better returns there, what skill set did you have to develop and how did you acquire that kind of knowledge to, because I speak to people and we look at businesses and board meetings and you'd be surprised how many business owners don't really know about P&L or the budget and like even where their money's being utilized, so what have you learned or how did you go and then where did you acquire that kind of information?
So I think as a buyer, first of all, like you have to become like a deal architect. So I think being a deal architect, you need to understand negotiation, you understand how to read a set of accounts without a doubt. You need to be you need to be a people's person because you're not going to build rapport if you're not. So structuring the deal and all that, there's quite a lot of skill sets like interlinked to have that.
Yeah.
But then post acquisition is a completely different skill set. Like they're two completely different things. So even the people in my group, we're doing a lot more post acquisition stuff now because a lot of people have bought businesses and then they're like, whoa, this is now, it's quite hard.
Yeah.
Because now I got a lot to look at. There's a lot more moving parts than I thought. So there's two different skill sets.
Yeah.
But yeah, I think that if you looking to buy on the front end, definitely like negotiation, you have to be able to read financial statements. And then I said leadership and being a people's person, two of the same things, but like the Robert Cialdini books are good because you've learned how to negotiate, but also how to find common ground, build rapport. Because it's, once you find common ground and build rapport, you may find that the seller wants you to buy it, and they're willing for you to buy it for less than person B, just because it's you. And we've had that loads of times.
I think they've got like a lot of business owners that they do have an emotional connection to that business, rightly so. They founded it and been running it 20 years and they see the staff like family, but they might be at a point where the business isn't servicing them and they're time to move on, but they still got that like connection to it and they want to see it go in the right hands. So I think if you can build that rapport and say, look, we ultimately are a business that buys businesses, but we're going to deal with it in the best possible way to make this business effectively better. Maybe through tech or putting the right people in the right places.
Yeah, definitely. I think when you speak to a seller, you do need to try and find where the value creation is going to come from your side, but also like where are they going to benefit out of this? Because you've got to create the win-win. And when you actually think of the opportunity, there's probably 5 to 6 million SMEs in the UK. Like those businesses employ over 60% of the workforce in the private sector, right? Why there's no more help given to SMEs, I don't know, because of that stat alone. But you have all this opportunity there. And a lot of these people, especially in the UK is like a lot less entrepreneurial than the US. So a lot of people build businesses in the UK, not to sell, but just build to have a business. Yeah. And then when it comes to the end of their working life, they, rather than divest the businesses in their first, they're normally not their first thought. Some people think like that, but most don't. They either want to pass it down to one of their children. In the generation that we're in now, a lot of business owners we speak to, their children have no interest whatsoever if their dad's got a plumbing and gas business.
Yeah. Well, I've got to leave the house.
Yeah, exactly. So most people don't want to do that. So that's the one avenue. The other ones, usually they just shut it down and then they just retire.
Yeah.
But then when you approach them, especially cold, and you're like, look, we're looking to buy, we've had so many people say, I never really thought about selling my business. And now it's like, oh, actually I have value. My business holds value. Of course it does. I've been doing this for 30 years. And then you're creating a win-win for them anyway. And that's another thing. Like we always try and advise the seller as well and like help them through it. So of course, when you're looking at, say, let's start like net profit, when you're building out the EBITDA, there's adjustments to be made. And on those adjustments, it could be like directors' pensions that, of course, you can add that back in. There could be some surplus salary in there. There could be one-off costs, like if you moved from one office to another or one unit to another. Like all of this stuff, we help them to be like, look, we're going to build out your bottom line for you and look at that. We're not just going to try and be like, that is what it is.
What the true cost is. Like, this is kind of what I spend on a monthly basis within the business, but actually this is what it should look like in terms of these are my fixed costs. These are like below the line, maybe kind of like you said, one-off costs, etc. You're kind of educating them through that, I guess, as well. Yeah,
we do help them because if there is other things, there's going to be replacement costs potentially if the owner's still an owner operator. We don't tend to look for those, but if there is one, then there could be some replacement costs. Of course, you've got 2020, 2021. There's going to be some government grants that you need to adjust for in there as well that a lot of businesses received. So there's things that you do need to look at, but we try and help them through that, and then also say to them, look, please go and get legal advice from someone that understands M&A. Don't use your local property conveyancer or a family friend, because they're all going to have studied some element of it when they're doing their degree and their exams, but find someone that's done one of these transactions. And a lot of people ask me, like, why would you tell them and advise them to do that? Because I'm like, one, you want them to understand what's going on. Two, it's fair. And three, do you know how much of a headache it's going to be if the person that's representing them doesn't understand what you're sending over?
Wow, yeah. It's so true. Like, we got it in like the short-term lending space where you have your residential conveyancers, and then you've got your specialist kind of conveyancers who understand the questions that the lender's asking. And if they don't have the right representation in the legal side, then it just delays things and it just causes a headache. So, and we know of someone who was selling a business, and he said, I do it all myself, but it's probably cost him £100,000 where he just hasn't done it properly, and now he's at a point where he's actually like disrupted the kind of value of his business. And if he just took advice and paid the solicitors what they're worth, who specialise in that space, he would have sold, and he could have moved on. But
it's definitely, when you actually look at this, like, most businesses are going to be sold with some sort of deferred element, right? Most people aren't going to give you 100% up front for the business, because they want you to, there has to be some element, you've got to share the risk in some way, shape or form. So if you don't get good legal advice and that SPA is not drawn up correctly, then your protection on that deferred consideration drastically changes. So as a seller, it makes no sense not to pay like the 10 or 20 grand you may pay the lawyer to draw that up and make sure that's done correctly. It's probably going to save you the 300 or 400 grand in the consideration.
Well, you see some vendors selling their businesses and and then getting sued literally a week later because they haven't got the right legal advice, they've done something wrong, and then now they're stuck in the business. They've got some money, but they're now getting sued by the people that bought it off them. It's just really messy. So you don't want to be in that position.
Because we had one which we didn't end up pursuing. It's still there, but they built a good business. There's two ladies built a fantastic business. We valued it at one price, and then based on the changes of the economic environment over the time through negotiations, like 12 months, in that sector, it changed drastically. So their forecast that they initially showed us 12 months before, they missed it by 35%. Obviously, that's huge. So I was like, there's a big difference. So we then basically said, look, we're going to have to put the entire deferred consideration on an earn-out. I said, based on the forecast that you provide, and they said they kept sending us all these different reports. And I'm like, it doesn't matter what those reports say. Your business didn't do what you said it did. But we had a great rapport with them, and they said, okay, look, we're happy. We'll do the earn-out. Then I was like, well, based on where you're currently at, your current figures, if we're going to give you the closing payment we initially agreed on, now we're paying quite a large multiple up front day one. So they was like, yeah, but we can't be on an earn out and reduce. I said, look, this is the only way it's going to happen. So then we reduced the closing payment. Now they came back because the earn out that we put together was we actually give them an opportunity to participate in some of the upside of the business. So if they broke the earn out, and then every pound above, they would have a share of their a profit share on every pound above the EBITDA that they bring in. But then also there's got to be some downsides. They also lose some if it comes underneath it. If you want the upside, there's some downside too.
Yeah.
They was worried about owing us money, but if that forecast comes in, then there's nothing to worry about. So then I started to see that their confidence that they initially had and the optimism they had 12 months before has clearly gone. And then unfortunately, one of the owners developed like a health issue. So then their motivation went super high. But we're not here to kick people when they're down. We want to help them, because it's not going to work. This business built a really good, solid culture. We needed them to help us in that transition period, because the transition period is really important. So you need to know that you can work with the seller as well. And some people, your values are just so off and they don't align, and then it becomes hard. So yeah, in that case, those earn outs, they can be tricky for people, but at the end of the day, if you believe that one of the only ways to bridge a valuation gap is one of the only ways. If someone thinks their business is worth X because all of a sudden 2023 was a crazy year, they've doubled their revenue, X, Y, and Z, and then you're like, well, the historical data doesn't really make sense to what this year's saying. The only way is to bridge that valuation gap potentially with an earn out. So, and then you start to see how optimistic they are. And the question I usually ask them is, on a scale of 1 to 10, if you remove the number 7, how confident are you that this forecast gonna come in?
Yeah.
And if they say 8, I still don't feel they're confident. It needs to be 9 or 10. And
I think this is what I was saying to people within our business. It's so important to have your board meetings and have the board meeting notes, but also your financial forecasts in there, especially when you're not looking to sell. Because you're going to be realistic with each other. Do you believe we're going to achieve this? How are we going to go and achieve it? And then you've got something to kind of hold you accountable as the year goes on, etc. But if I'm looking at buying a business, I want to see that information. I don't want to just see a forecast that's been put together today for the next 12, 24 months. Because I'm like, well, show me a time when you've done that in your business and it's come off. Oh, we've never done it. Okay, so how's this going to come off? Walk me through that process. And I think if you ever look into exit, I think it's them things that you don't really think about that you should put into your business that will help you down the line. And it will also help with the management team. Like, we talk about assets under management, like 100 million, but we share that with the whole team and what that means to the business and how many clients we'll be helping and the way we're going to go and acquire it, build out that. So it's like, it can then become part of the culture, the vision and the aspirations, but also if we ever look to exit, look, this is what we've done, this is how we've done it, so.
I think that especially if anyone's looking to exit and you want to, exit at the highest possible figure that you want to get, then I would give yourself like a 24-month runway.
Yeah.
To prep the business to sell, because it's going to be things that we all do it. We have a business and we all do things a certain way because of the business and whatever. And so to remove some of the dependency from the business, to make sure you're being as efficient as you possibly can, to make it as sellable and as commercially appealing as possible, you want to give yourself a 24-month runway, I think, as a minimum. Because otherwise you have to try and justify and explain certain things. And then all as a buyer, they're just going to be looking for discounts. They're going to be like, okay, well, choppy revenue, unexplainable. Okay, discount. Okay, what happened there? You dip in gross margin, discount. Okay, you're still in the day-to-day of the business, discount. All of a sudden, you're like, you can't do anything because that's just the way it is at that specific time. So if you give yourself a good runway, you get to, sort all those inefficiencies out to make the business more commercially appealing.
I think you can actually do more damage to your business by putting it on the market too early, right? Without what you're just saying there, it's like selling a house. You would dress it up really nice, wouldn't you? Do you know what I mean? You would leave all the kids' stuff out and everything. You'd have it all dressed up really nice. And I think, doing it fairly and ethically in terms of the business, but you want to give yourself that best opportunity. And what sort of advice, because say if you were talking about a plumbing business earlier, or financial service businesses, where do people get that advice? If their job, they're really good at being a plumber, so they built a business, they've got 10 people working for them, you've got a great reputation, but they've never sold a business. Where do they go to get that kind of information?
So personally, I would look at the only place that our information really is in books, because a lot of people, if you go, how do I sell my business? There's going to be articles that people's put on the internet that tells you. There's actually a really good website. It's a friend of mine owns it, called Divestopedia. Yeah. John, his website. Shout out to
John.
Yeah, insane. He built. I think he bought on an acquisition journey, 270 million, IPO'd, and now he helps businesses sell. But he's based in Canada, but he does a lot of business over there. But he has some really good tools on exit planning, on how to really position your business to sell.
What is it called? Sorry,
Divestopedia. He has some really good tools on there. But yeah, that just come to mind. But other than that, there's not actually a great deal. Most people go to KBS, Knightsbridge, and I got my own opinion on there. But
see the fees.
Yeah, it's like, you give us 50 grand, and we can sell your business. And we sold one just like yours last week for this money.
We think that that with you have your business brokers, but if you're selling via one of these consultancies or they're brokering for you, they normally are working for the buyer as well. So it's just being mindful, what their kind of track record look like. Because if I'm selling via brokerage and they've worked for this, like they've got a close relationship with this institution, then how much information, are they going to get me the best price possible, basically? So it's just being aware of what opportunities are available and who's the right people to work with.
Yeah. I'm keen to understand what businesses have you got at the moment, and also like where you're going, what's your sort of ambition for the future?
Right. So you mentioned before we started. So one of the things that something that we didn't look at before was to acquire something in the UAE, just because how can I say this in the nicest possible way? The banking sector and the way their banking works over there doesn't quite work for the way we would take on, say, like a leverage buyout. You're just taking on debt to buy the business, right? The UK, US, Canada, Australia, many places in the world, that's available. You can get some ABL, or you can get cash flow loans, or just acquisition finance in general to buy a business. The UAE doesn't really have that. Like the mortgage market out there still isn't great, So it wasn't something we initially looked at. And then a friend of mine, Adam, was like, "I'm to start a real estate company over here," because he already had a service accommodation business there. I was like, okay. I thought, my brother's fiance is actually over there as an agent, and she's crushing it, So I was like, I started to look at this, and I'm like, wow, some of these
50-50 comms and
it's a perfect model because it's based on performance. Like, I think this country needs a lot more. It needs to be incentivized on performance, a lot more of the workforce, because that's where no one wants to work. So I like that business model. So he looked at it and I said, look, mate, if you start this out there, you're just going to be another startup real estate company. Most of them fail because they don't have the capital. No, I'm going to throw the money into it. And I said, no doubt you have, but the credibility isn't going to be there because you started last week. So I said, have a look on the market and see what's available. So he found one. It was a Russian and a German guy. They had a bit of a falling out. So it's completely distressed, but they had done some pretty good transactions previously. So I said, surely it would just make more sense, even if we don't keep the staff, the office or nothing, just to buy that based on the fact that it was established a long time ago. And two, the license will show that as well. Whereas, so you can actually say, look, we've established 2016 instead of today. So he said, would you be interested in doing this? I'm like, yeah, actually, I would. I said, let's put a plan together on how we're going to actually grow this. I said, you need to be there full time. It's not going to work if you're going to be in the UK half the year. We need a leader over there. So that was something that really was something I really wanted to focus on. Now, before that, we've got e-com companies, quite a few in construction, that real estate company. What else do we have at the moment? Probably mainly construction, like plumbing, civils, electrics. But now we're more focused on civils, just purely because of the way the business model works. They're the first in. They get paid when the money's still there. Like say like Taylor Wimpey is building a big development, and not that this is something that like we'd look to do, but obviously people can't see what's in the ground. So, it's quite a niche skill set to have, but I'm just more concerned. I've had plumbing businesses before. They were some of the first I actually acquired the way that I do this now. And when you look at the retention, so they hold some money back until the end. I could tell you some stories on what happened there, but with civils, there's still retention, but like I said, there's money still there to get paid. Whereas if you're the person coming in doing the snagging at the end, good luck getting your money. And then another thing is one of the ones that we're in the process of buying now is street lighting. So they put the columns in. So even in a bad economic climate, you have the developer has like a bond with the local council, right? So when they want to get that money back for the bond, they'll pay whatever they can to finish off, which is obviously a lot of the street lighting and a lot of the stuff to get signed off. So it's a lot more resilient than a lot of the construction, but of course it can still get hammered just as well as the others too.
Yeah, they sound very traditional companies that you're buying. Yeah. Is there a reason for that? Do you not feel like going into crypto, creating the next Netflix, building a rocket, taking off, going to the moon, that stuff?
Yeah, no, so because a lot of like the tech-based businesses, they demand really high multiples. There's a lot of like intangible value, perceived intangible value to them. So they're like, oh yeah, we want 15x just for this software. And So that's why we stay away from them. Plus traditional businesses, they haven't integrated not any, but a lot of them haven't integrated much technology, no automation. So you can build out the customer journey quite easily. And a lot of them have been scared to invest in even like a sector specific CRM. You know, it's crazy. Like they don't want to invest in it. It could be 10 grand and they're doing 300-400 grand profit and they don't want to do that.
They don't see it as an investment. I find that they don't, oh, we need to bring in this manager or this bit of tech over here. They don't see that as an investment. They see it as like taking cash away from their expenditure. What they need to pay. They're like, oh, but I've actually got 50 grand a month I need to spend. So I can't spend another 10 grand, but that's going to eat into my dividends or whatever. And actually, if they went, well, I put that 10 or 20 grand into that investment, then it might make the workforce more efficient, right? And actually increase their revenue and profit margin.
They see that as pain, but it's taking pain away because there's pain already in the company right now because there's inefficiencies, right? But yeah, like you said, because they don't want to go through, they don't want to say to the staff, oh, you've got to now train on the new CRM and this is how. So yeah, the traditional ones I think work well. We've seen stuff that we've bought that are still writing out invoices on paper, you know, so like it's quite easy win. So yeah, we bought a used car business like a few months ago as well. Like it's obviously a lot more profit in there than we initially thought, but I couldn't believe some of the things they were doing in there. The hair and beauty group. So this was actually quite an interesting one. So my brother is like a hair and beauty consultant. He lives in Dubai. He does a lot of consultancy around the world for different salons and to help them grow. And we found something Cheltenham and Gloucester way, and we ended up buying it for £1. I'll explain how in a sec. But we looked at the utilization percentage of the workforce, and I was like, it seems so overstaffed. As you know, because of TUPE in the UK, it's very hard with employment rights just to slash headcount very quickly. So we looked at it and it was like under 50%. And the general manager was like, we need to employ more people. I was like, we don't. We need to get the people there working harder. Because
sorry to interrupt. Is that like, so when you're looking at the utilization of the workforce, is it based on the KPI set per person, or how do you measure that, like the output the workforce should be doing?
So in that company, for instance, because on their centralized CRM, the system they had, you could see who was booked and who wasn't. So based on their bookings, I could see how much the workforce are being utilized. But the only way you're going to track it in some businesses, you're going to have to, it's going to be like more one-to-one KPIs. But something that we don't look to do initially is buy something and slam them with a load of KPIs. That's just a fast-track way of being hated. So we try to, like, especially for the first 90 days, unless there's something immediately we need to change, we try not to change nothing. We just watch. Let's see what we can improve on, rather than just go in there and be like, right now you have to go and do all these different things every single day.
How did you buy that company for £1?
So my brother was looking for them. He wanted to get more involved in M&A. So him and someone else in the group partnered and showed me it. And I looked at it and I was like, yeah, it does over 100 grand profit. It's a pretty good business, right? But I looked at the balance sheet and the balance sheet was insolvent. So they was taking excess dividends to the point where it was just going into the director's loan account, and then, you know, that's got to be dealt with on close, right? And then there was some bounce back loans in there, a few things that just made the balance sheet insolvent. So on a debt-free, cash-free basis, I spoke to the business owner. I'm like, by the time we give you the multiple that we believe the business is worth, by the time you pay down all that debt, you're going to owe us money. So there's another way of doing this. So there's a thing called invoicing out, right? Where if you can go to an insolvency practitioner, you can put the business into insolvency, you create a new SPV, move the assets and the staff over. You have no choice, move the staff over, and then now you have a new new business. But now this is now got rid of all the debt. So the initial business has gone to insolvency. You now moved everything over to the new business. You can also wrap the insolvency fees into that, which is about £6.5 grand plus VAT. And now you've got a new business. Now, the invoicing out method would be you create like a 90-day invoice or 120-day invoice for the assets at like 50% of what they're worth, sometimes less. But in this case, the IP that we work with is very good. He wrapped all the assets up into his fee and just said they're not worth anything. So we come out it was nothing. So the business was, you have to exchange £1. So the deal was done for £1 and all the fees was wrapped up into the insolvency practitioner. So basically you've got a business doing 105 grand profit for £1. So there's some cool things you can do there as well.
Nice.
And that works really well if you've got a platform company.
Yeah.
Like it sounds really cool, like you buy a distressed business for £1 and whatever, and you can. There's loads on RightBiz for sale now, like 20 million revenue.
Bricks. I sold for £1.
Yeah. But you've got to look at it as like this working capital that you need to account for. So you could go and buy a business doing 20 mil revenue, and you're like, yes, I just bought a business for £1, 20 mil. But then all your outgoings every month could be a couple of million, which then you've got to find that because when you look at the cash conversion cycle of a business, there's probably a reason why it's distressed. Obviously there's many days they're deprived of cash, they're struggling to get the cash in, so then you go inject that into the business. Whereas this business was a little bit different, where there was money there that they had to inject for working capital if needed, but fortunately they didn't have to do it. But yeah.
Right. So let's say I found a business, how would I go about funding it? Like, can you raise money from banks? Is it all private, or does it have to be your money?
So it depends. You're going to have to raise some money, right? Like there's no money down deals. There's some in the group. I never push them, even though we do them, because I don't feel that it's a good reflection of buying a business. Like going into it with that mindset, like same as property, right? Like you don't want to go in with a no money down mindset. It does cost money. So there's a few ways you can do it. So like I said, there's you can get some asset-based finance, you can get cash flow loans, there's this specialist acquisition finance. There's a lot of ways you can do it. There's probably going to be a mixture of debt and cash in the deal. But for instance, just to give you an example, so one that we have in legals now, we was meant to complete on this a few weeks ago, but it's still going on, trials and tribulations. This one is around free cash. Let's say the net profit of the business is around $1 million, right? Closing payments $1 million. We bought it at quite a good multiple, it's like a 2.4x. Closing payments $1 million, but 400k of that 2.4 is the debtors, which is the retention of the debtors. Okay, so our money in that deal is 100k to do the deal. Now this is what I mean by leverage, and when we talked about property and business earlier, why would I want to keep putting the money into property? Because our money in that deal is 100k. So we're taking on like the receivables, which is the debtors, the people that owe the company money. The debtors book, we've leveraged the debtors book, which has allowed us to then leverage that 900k. So the £1 million closing payment, 900k is going to come from a bank, and 100k is our own money, and then the rest is deferred. So essentially, you're buying a business that's doing 100k, £1 million profit. Technically, 100k of your money in. Now, after the seller finance, because there's a deferred consideration, we pushed out over 60 months to help with working capital and the cash flow of the company. So that deferred consideration is over 60 months. The retention comes in as and when, that 400k. And then even with the debt obligations, so the interest payments of that debt, our free cash flow for that business is around 650k. So we're exchanging. So you got to think, right? Like we're getting 650k profit, free cash flow every single year for 100k in. And when people ask me, why have you stopped buying property? That's why.
I'll take 10 of them, please.
Yeah.
Do you think a lot of business owners underestimate the working capital element of it, especially when they're trying to like exit a business? Because I'm speaking to some about moving money around and stuff, and it's like they almost disregard it, but it's so important to the business, right?
Wow, we're our working capital. So one of the things that we require when we buy a business is we're like, look, a lot of people don't take all the money out of the business because, as you know, like, I think it's called BADR now, but Entrepreneurs Relief,
$1 million,
10% capital gains up to $1 million, right? So, a lot of small businesses, it's still a decent sized business, if even at $1 million, because, let's say even at a 3x, it's 300k profit, it's still a decent sized business, right? So, but a lot of people have built up this money in these cash reserves because they don't want to take it out because they don't want to pay the tax on it. So you can actually help them on close and be like, look, we can show you more of a tax efficient way of taking this out of the business. Yeah. We'll add it to the closing payment. Now, what was the question?
So it's just about like cash flow.
Sorry, working capital.
Working capital, so yeah.
So I went off on a tangent. So like, let's say we always require them to leave some working capital in the company, right? The business isn't going to be able to function. Yeah. So for me, working capital is an asset of the company. You can't just be like,
when I like to put it like that.
Yeah.
It is an asset,
Yeah, when you look at like debt-free, cash-free, yes, it is going to be debt-free, cash-free, but just like if it's a civils company, that excavator you're leaving behind in the business, as far as I'm concerned, 3 months working capital is you leaving behind the same as you're leaving behind that excavator or that piece of plant. Same thing for me. Now, a lot of business owners will say, I'm not leaving that. Why? I'm just giving you money for free. It's like, well, it looks like you are, but that is part of the business. The business, any surplus from the working capital, take out. So if the working capital is 100 grand, you got another 900K, take it.
Yeah.
That's yours. We're happy for you to take that. That's your hard-earned money.
Yeah.
But the business does need to operate, right?
Yeah.
Now, a lot of people won't want to concede on 3 months. So I'll tend to say, look, you leave in 1 month, you have to leave 1 month, right? The other 2, leave in the business and we'll add it to the deferred payment. So we'll pay you back for it, but you're just going to leave it in because we need 3 months. That way that you don't have to put extra money into the deal. So you can over raise on the front end if you want. And we've done that a few times. A few people in the group, they take a deal fee. I don't think that's a good way to do it. A lot of people push that. Like if there's like 200K in the bank and you need 100, they'll go and take 100 out. I'd just rather leave it in. You can take it whenever you want if it's there to take. Yeah. But you probably end up finding that you may need more money. So I'd rather not take it out. But yeah, working capital is the life and blood of the business. People do definitely underestimate how much working capital is needed and how important it is to the business.
Yeah, agreed. What, like for your mentees and for yourself, what kind of red flags do you like? You know, we look at like a lot of risk management stuff. So if you look at like red flags or risk management when buying a business, what are you kind of looking for? You got your things that should work, should be there, but there's things that you want to be like maybe there's a structure, like the way they structure their business, various holding companies. You know, is there things you look at straight and go, that's a no? Do you know what I mean?
If it's like completely owner operated and has just massive amounts of key man dependency, then because some of the
it's almost like one person at the top knows everything and doesn't. There's not like if you move him or her, then that's like business almost fails.
Yeah, because when you start looking at replacement costs, you need 3 people.
Yeah.
So it's like and we've seen that in haulage. So he's looking at haulage for a little bit, and there was so much tribal knowledge in the sector, and it was you needed to be ingrained in the network. It was like, we're just not going to be able to move the needle here. It's just not going to work for us. Plus the margins, you may as well buy Apple stock because the margins are so small. But so key man dependency, revenue concentration, it's like a bit of a double-edged sword. You wouldn't want the revenue split to be like 60-70% dependent on one.
You got like one client or two, that bringing most of the revenue, but okay,
you wouldn't want to see that like this. There is some factors where you consider it because there's ways you can improve that, but that's a big risk for us because you lose the one client, especially when you go through a change of complete ownership. That could happen. So yeah, key man dependency, revenue concentration. If I'm seeing a consistent fall in gross margin, I don't like to see that, especially if they're growing and losing on gross margin. So if the business's revenue's going up, margin's going down, I'm like, you're not growing at a sustainable rate. Like what's happened? What's going on? If they're very subcontractor heavy to the point where they're reliant on subcontractors, not that we wouldn't entertain it, because in construction we have no choice. Like most of the things you have in construction, we rely on subcontractors. A lot of them say they have like an approved subbies list, but I've never seen like a really good approved subbies list. I don't know what that even means, you know. Just ones they've worked with for a long period of time. There is quite a lot of things. Like it's probably a deal by deal basis. Like there is some things that you do have to be careful of. Like there's one where like family members, we don't want to retain any family members in the business. I don't think it makes sense. But again, it depends on the deal. Like it could be a case where maybe we would. You know, we've done that. We have done that before. We've kept a family member in management. If there isn't any management structure, that would probably put us off because then how we can't really do what we want to do, wouldn't really fit our business model. The thing with M&A is you can get so creative to the point where you can force a deal. That's where you've got to be careful. That's one of the biggest risks is that. But yeah, when I say
when you force a deal that you get into a deal that's not actually a great deal.
No, as in like you can see where property, right? It's kind of like black and white, isn't it? It's like this is the price of the property. Can you get below market value? Okay, yes or no. Okay, this is where I raised the money. This is the loan facility I can take. Deals done. Yeah. This is where I can add value. There's not a lot of things really you can do. You can't be that creative in it. It's just a few things you can do. Whereas business, wow, it's like you can be like, well, this person wants an extra 100K. Okay, we'll put that into an earn out, or we'll put this on a, like, there's so much you can do to move the deal around to make it fit to the point where it's quite risky. And if you get confirmation bias and your bias is really in towards, I need to get this deal done, you can make it happen.
Yeah.
And that's where you get problems. So we try and stick to a certain criteria depending on what sector we're looking in. And we try not to deviate off it unless there's a way that we can do it which doesn't bring on too much risk, because there's no way of doing it without taking on risk. It's impossible. You're taking on risk regardless, but just you want to try and mitigate as much of the risk as possible. But yeah, the things I mentioned are probably the main things we look at.
Just one thing on that. You mentioned management structure. What does a good management structure look like for you guys?
So you'll be surprised. A lot of people like to have this big spider's web of management structure. We'll flatten that out straight away if we buy a business. I don't think that you need a manager talking to a manager talking to a manager. That just, to me, doesn't work. Yeah. I think that we've seen that now, even at the highest level now, where, Elon with Twitter, you start to see now just like, look, what are all these people doing? So we look at something that has someone that's been in a management role for, you'd like to say, at least 10 years. Someone that isn't coming up to retirement. So, probably not 60 yet. This would be a perfect case scenario, but between 50 and 60. So they still got some energy, but they've got the experience. Yeah. And then someone that's like a protege that's coming up that they're mentoring.
Succession planning.
Yeah. That would be the perfect case scenario. But management structure would be mainly like, depend on how many like departments there are. So if it's like, again, I use the service, sales department, service department, finance department. You'd like to see someone that's in control of each of those departments, and then someone that's in like a CEO role that it knows where the business is going. Because when people look at CEOs at like at SME level, like I hate the whole C-suite sort of titles. Like call yourself wherever you want, as far as I'm concerned. It just doesn't really make. Just do what you need to do. Yeah. If you want to call yourself a fancy name, do it. Like whatever. But the good thing is, you give someone a title, they can own the title. Then I think that helps.
The worst thing about that can put unnecessary pressure on people. We were speaking in our leadership team the other day. We had these titles: Group MD, all this stuff, sales director. And we thought, do you know what? Like, it's putting pressure on. Why don't we just focus on what our strengths are, and then be aware of our weaknesses and just move on each other in the strengths. Do you know what I mean? And we report back to, we've got certain reportings we've got to bring to the table, but it's just like remove the unnecessary kind of noise with it.
What opportunities are you seeing in the market over the next sort of 12, 13, 14 months?
More business owners to exit. You've got the baby boomers that are retiring daily anyway. They hold most of the SMEs. So I think that's, I can't remember the exact amount, but I know in America it's like 10,000 a day retiring from now until 2028 or something like that. So the UK is not going to be as big because there's less people, but they hold the keys to a lot of these businesses. So I feel that young new blood coming in and integrating tech into traditional businesses is a huge opportunity. So I think there's always going to be opportunity in construction. I think that in our society, build is always going to be the narrative that's being pushed, whether we need them or not. That's on the topic for another day. But, I think that, that's always going to be something that's being pushed, and is always going to be something that people's going to use to get elected. We're going to build more houses. We're going to do so. I think that construction is always going to be. We're always going to need to build. Now I think that there's going to be development in construction. I think that people can have first mover advantage. So when you're looking like 3D print, and you're looking at a lot of the modular stuff that's being built, I think that if you did focus on now and look at some of the technology that's coming out on some machines, I think that there's going to be massive opportunity there. But I also think that I'd like to see it. I don't know if it's going to happen, but I'd like to see, again, more performance-based workforce coming in. It's looking more like we're going to go down the universal basic income more than an efficient workforce. So if you can try and go down some more incentivized business model. Like one of the things that we have is a thing called Dealmaker, where we help. It's like sell-side advisory, so we help people sell, and we don't just try and take 50 grand off you up front. We help you position your business to sell, give you that runway. Now our team in that business is the exact same business model as our business in Dubai. same thing, commission only, and it's more incentive based. Everyone's a consultant. So I think that I think there's a lot of opportunity on that side of stuff, but obviously you have to be careful just because of the way things are structured in the UK.
Yeah, there's a lot of that in like Dubai and America, so I think it'd be good to see the UK sort of follow suit. I quite like that sort of structure. Just work hard and you can make money, and it's up to you on how much you make, right?
Yeah, if you work hard, you get paid. If you don't work, you go home, and that's why Dubai is successful.
What's that real estate agent in Dubai? Allsop.
Yeah.
Well, they've got like 200 odd plus brokers or advisors working for them.
You've got Ryan Serhant as well in America.
50% comms, but then so your overheads in terms of paying for staff, it's all commission based, right? So you come in and deliver and you get paid well. So.
So that's the thing, and I think that you see people, they got a great life out there because they work hard and the commissions are big. You know, those, again, 2 or 3% on something you've just sold that's like 40-50 million dirhams. You know, you do a couple of those a year and all of a sudden you're earning a lot of money, right? And then you know, and the overheads obviously for the business are going to be like you have to have a good nice office and all the other stuff that comes with it, but realistically you bring people in, you're going to have a lot of, it's like a revolving door because a lot of people are going to come and go, but in general, if the opportunity is there to make a lot of money. I'd love to see more of that in the UK, but it just is going the complete opposite way at the moment.
There's that like 80-20 rule, isn't there? So like 20% of the do most of the sales, you know. So I think it's like that in that environment. Like it's very crowded, but the ones who are committed and want to perform will find a way to make it happen, build relationships, work on themselves, get around the right people, and just be relentless with it. Because anything worth having's not necessarily that easy, right? You got to put yourself out there and push through, put your head above the parapet, as they say. So that's my experience. I started my career in West London estate agency, and it was like ruthless. Like people were hiding the keys. Like I was like, people turned up for a view, and I was like, "Where's the keys?" And all the agents were like, "Don't know." I'm like, oh, "Fucking hell, what's going on here?" Do you know what I mean? You know, and but you know, that's it. You got to just power through, you know. And it's amazing to hear about that business, because we thought about, you know, we got the estate agency side, like how can we make this work in Dubai? So it's really a good insight to what you guys are doing out there.
Yeah, definitely.
Yeah, there's a lot of young entrepreneurs that, you know, want to build businesses and grow them and become the next billionaire, but they often lack knowledge. What sort of advice would you give to someone on where to get that knowledge?
So I think that there's 2 ways to do it. You either go and get a job or you start a business. Now, all this sack your boss stuff that's out there winds me up. So I'm like...
Yeah, it winds me up because I've got like quite a few people that do it. Like.
But also, I'm like, the people that are like, sack your boss or this, I'm like, you do know if you sack your boss, right, you're saying basically you're going to go and start your own business. Guess who you're going to need when you start your own business? People. So do you want them to then say sack your boss? And then it's just, so it doesn't make sense. But also, I think I definitely would go and get a job, like, or start your own business. But once you get a job, when you're in a job, the amount you can learn from it. So the person that's give you the job, for one, they've done something right to be able to pay you to do something that they don't no longer need to do. So they've done something right to be able to do that. And then if they build you a bigger team, there's a lot you can take from them. And then if you're in an establishment that you work in, regardless of what your role is, ask questions like, you know, look at where the money comes in and out of the company. Look at how they're retaining clients. Look at how they're going to get clients. Look at the whole customer journey, and then look at what people are doing in different departments and where the efficiencies are in the business. So there's so much you can learn by going to get a job. It's unbelievable, you know. So like, it's crazy that you're going to go and get paid to learn. Like,
that's the way I think about it.
So it's unbelievable. So that's the one thing. Or if you did want to learn, then go and start a business. And then the good thing about that is you then also learn how to wear all the hats because you've got no choice. And then you realize how difficult it actually is, because especially a startup, because you don't have no customers, there is no brand, there's no infrastructure. All you're doing is throwing money into something, and you have to be everyone. You have to be the marketing person, you have to be the salesperson, you have to be the finance person. You've got to do everything. So you learn stuff very, very quickly. But I think being educated, go and do the old school way of reading books, or pay someone that if you haven't got a job and the person's not your mentor, which obviously clearly you have, then just go and pay someone to get your time. You're going to get your time back. So that's the only ways really you can do it, is actually go and do it and get a real life experience.
Yeah, because a lot of business owners have developed that knowledge over 10, 20 years, 30 years, and then you can spend a few days with them and pick up all their little nuggets.
Oh yeah,
It's-
it's so much you can learn. Like, you know,
amazing.
it's unbelievable. And I've always been someone that if I can get in front of somebody that has done it, I just rather pay for them for their time. Like, you know, regardless of what it is, like if you can do it, then do it, because just have a list, you know, of things that you want to ask that person, and you utilize that hour or 2 hours, get as much information out of them as you possibly can, and it'll be the best money you've ever spent.
They say, you know, we were speaking off camera about getting away from, maybe depends where you grew up and what your life was like back then, but actually if you want to have any element of success, you kind of got to get yourself around people that have kind of done it, been there, depending on what area you want to be in. Like, you might want to be an Olympic athlete, so you got to go and running, or hang down the running track with the trainers and just be around them all the time. What do you eat? How often do you train? How often do you rest? You know, what do you focus on? What's your plan? And it's the same in business. You know, who's doing well, who's exiting, who's growing, who's scaling. You know, Jamie Waller, his kind of niche is start a business, build it to 50 mil, and then go again, exit. And it, like, you know, so if that's something interesting, go and get around these sort of people. You know, I'm a big believer in experience. And I wanted to set up when I was 30. I've had a few things in the background when I was younger, like just silly ideas, but didn't work really. But I was always like 30. So, you know, I went through corporates, then independence. So I thought the culprits of the structure, maybe too much structure, meetings for the sake of meetings, too many titles, too much bullshit really. And then independence, a lot more entrepreneurial, but lots of inefficiencies in the business. You know, it could be done better. So like, how to bring the two together. So my last company I was in is like, okay, now I know how not to run a business. You know, the guy's style of leadership was putting people's pictures on the wall and then like cartoon characters, and he'd be like, you look like him, you look like him. And I was like, whoa, you can't do this. Like, you know what I mean? Like, you know, and they're not paying people on time and all this sort of stuff. So he was like really over that, you know, very different to what you'd expect from a leader. But, you know, I took the time in there to learn the knowledge of the industry, what's going on, and bring that together. I'm not saying I'm perfect, but you can't beat that knowledge. And old school of the books as well. And like nowadays you've got apps like Headway, which you can listen to a book in 15 minutes, right? Yeah. And, you know, what's it? 7 Habits of Highly, is it 15 or 7 Habits of Highly Effective People? I remember my friend, you know, he was like, yeah, it's a great book. You just read it on Wikipedia, the 7 points, right? So it's like, you can fast track this stuff. But ultimately, though, what I will say is you can have all the experience in a business, but unless you go and get out there and, you know, take some action, and you might not get the results you want, but unless you go and get that tangible data from the market, what you're doing is good or what you're doing is not good, and you've got to tweak and pivot. Don't be put off by that. Just get out there and make yourself, you know, accountable.
This is what I tell everyone in the group. This, like, they go through all the videos, they on all the mastermind sessions, they ask all the questions, and then I'll meet them at like one of our meetups, and they're very knowledgeable on everything. I'm like, you got to get on the phone, because, you know, I've met so many people over my life where they're the smartest person down the pub. Yeah, you know, and they don't do anything. You know, it's like, you know, so, and like you know, the thing that I always thought for like my kids and stuff, I'm like my biggest fear would be to get to when they're like 16, 17, I'm trying to give them life advice, and then I haven't done anything that I'm telling them what they should do. Like, that would be my biggest fear. Like, you know, so, and it's the same in life. You speak to someone and they're like, they could tell you some really valuable information, but if they don't do anything or they haven't done anything, it's very hard for you to take that on board. So yeah, just definitely put yourself around the right people. I think it's the biggest hack. Like, everyone looks for these little hacks and like, oh, you know, what's the way that you can do it to fast track your way there? It's like, there isn't actually that much of a fast track. The fast track is put yourself around the right people, make sure your environment's good first, and then absorb as much information as possible, and then take action. That's the fast track. There is no, you know, the people that you put yourself around, all the other things that people talk about, you'll find that they're not the fast track. You end up failing that way. You know, it's you know, and failure's good. I think that there's obviously value in failure, but you know, you can definitely put yourself around the right people first, and the probability of failing is going to come down.
I think as well, people struggle with their self-image, like how they see themselves. So it's like the thought of buying and selling business or starting a business, they want to do it, but they just don't believe they can do it. And I think that's something people should work on. I worked for a guy in Knightsbridge before, and it was all sales basically. And every day we did an hour's training on sales and self-development. When I first got there, I thought, what is going on? Like, everyone's in pinstripe suits, 3-piece suits. We had 17-year-olds up to 40-year-olds, but everyone bought into the culture and the belief that they were improving themselves every single day, right? So do it. It was amazing. It was an amazing place to be. But one of the biggest things I took away was like your self-image, what you're telling yourself. It could be a negative or it could be a positive. And if it's like, if you focus on like, he always said, you plus change equals what you want. So it's not like I need more money. Oh, I'm not getting paid because the company's not very good, or I need to be in better shape, or it's because my partner feeds me all this food. It's like it's whatever, you plus change equals what you want. So if you can work on your self-image, how you see yourself, and then understand that anything you do is your responsibility. Anything you want is your responsibility. And then get yourself around a good group, like you guys, what you're doing, what we're doing. Get around that, rub shoulders with them, ask good questions, and then go for it, right?
Yeah, I think the number one skill to have. I always used to think about what would I tell my kids. I always thought I need to give them that financial intelligence, financial intelligence. And as time's gone on and just experience through life, I think the emotional intelligence it needs to come first. I think if someone can master that, read books on that, master that, and you can develop really, really good self-awareness, everything else afterwards will fall in place a lot easier, rather than doing the other one first. Because if, like you said, if you are not very self-aware, you're going to make pretty bad decisions. You're not going to know. You're going to be very reactive. You're going to get defensive very quick over things that they don't even matter. Like if you're a very reactive person, then you're going to struggle.
We say in our business, keep the passion, lose the emotion. And because we've had people kicking chairs and like, and I'm like, what? Like we understand that's passion.
Yeah.
But the emotion needs to simmer down a little bit. Harness that. And that comes from emotional intelligence. Yeah. Again, back working to your strengths and weaknesses, right?
And if you look at some of the most successful people in the world, look at their EQ. Look at how emotionally intelligent they are. Like you look at Elon Musk, Steve Jobs, you start to see how stoic they are when they're being interviewed. Like look at Elon Musk's interviews on any podcast. Look how stoic he is. He doesn't rush in to answer questions very fast. He thinks before he answers. He doesn't just quickly react. And you start to see those sort of people, and you start to think, wow, their EQ's huge. Then you start to think, oh, maybe that's part of their success. And then obviously you do have people on the other side that are just really aggressive, and they've also got some success too. But I suppose I think that's one of the best skill sets to have.
Yeah, what people / companies do you like look up to and inspire you to like move forward?
So I love Elon because he's an innovator.
Yeah,
and he's not scared to fail, and he's taking big risks. So I like Elon Musk, but on I think I like Dan Kremens. His LinkedIn stuff's really good. Great books.
Yeah.
Private equity guy. I think he's awesome. Adam Coffey. I like his books, and I like what he's done. Nick Bradley. Now Nick, he's got a podcast called Scale Up. So Nick used to work for Blackstone, private equity, and he's an incredible guy. Very strategic thinker. He's done billions in exits, and I think he's done like 27. So I look up to him for what he's done. 27,
you say?
I don't know, 27 exits. He's done some really cool stuff. I think Alex Hormozi, I think he's one of the, for now, I think that he's a very strategic thinker. But yeah, they're probably there's loads. Like I think that you can learn from so many people. Like Dan Sullivan, so I know if you're familiar with the Strategic Coach, they're one of the oldest coaching programs in the world. But he's the author of Who Not How, which is an unbelievable book. And Dan Sullivan, his program over time of growth mindset and growing your business. I like what he's done. But yeah, the list's so long. I could probably list so many people that I've taken little bits from. There's loads. Yeah,
it's just about improving yourself 1% every day, isn't it?
Definitely. It's just, you can learn from anyone. There's always going to be things you learn. Like one thing I don't like is when people just disregard people. They think that they can't learn from them, and especially like people that are older than you. There's, even if they're not as successful as you, they've lived more life than you, so they're going to have experienced things that you haven't regardless. So always listen, always absorb things, because you'll be surprised. And it could be one little thing that someone says, or a quote, or something that, that's quite touching, and so I just think that be open-minded to learn from anyone, realistically, because you never know.
Normally it is that little one thing you take away, isn't it, that makes a difference. If you want some life lessons, you go down to my dad's, where he used to drink, the Irish pub in South East London. You learn a few things off them old boys. They lived like 50 lives. I used to be like 7 years old, like the best pool player in year 4 or whatever. And I'd be like listening to the information. It's amazing. It's character building, my mum used to call it. But for those, obviously you've got a platform where you're helping people in that kind of mergers and acquisition space, or at least get a deeper understanding for it. Do you want to tell us a bit about that? Are you opening a door for more people to join? Is there minimum criteria, anything like that?
So now we are. So we didn't like advertise it as much before, just because a lot of people then like some sort of one-to-one help, and it'd be impossible for me to actually do the thing that I'm helping them with if I did that. So we didn't, but now we brought a lot more people in. We brought 2 people in actually. That's one has his own private equity firm, the other one does like a turnaround specialist. So we're bringing people in that have really good skill sets to also help on the mentorship side, and also offer non-exec roles if someone wants it. So when anyone listening, if they went to just deeludlow.com, it's like some free tools and downloads from there, and then it gives you a bit more of an understanding of what we do. But the group, we have like 4 meetups a year, so once a quarter. We have weekly mastermind sessions that we talk about everything. So we do some pretty cool things as well, like more interactive, like we do deal or no deal sessions where we'll pull up a deal and then we get to decide if someone would do it or not, put them into breakout rooms. We do like round table sessions where people just come on and they discuss with the group one of the deals that they're working on and if anyone can help. We've got some really good people in that group, as well. So like the feedback you're gonna get is not just from me. We've got like chartered accountants in there, like I said, turnaround specialists, ex-private equity, lawyers. So some of the things the feedback you're gonna get is like invaluable, really. And people's completely either be put off from a deal or they've reworked the complete structure of a deal just from one of those sessions. And then we talk a lot. We talk about exit planning, like value creation, how to build off that actually operationally, how to run a business, what to do 90 days post-acquisition, and then all the other stuff, how to position yourself as a buyer and negotiating. It's pretty much everything. It's just to arm someone with as much tools as they can.
I think from my understanding is what your setup basically is like, say for example, you got an Olympian, they want to go to the Olympics and get a gold medal. That's their objective. But they can't just do it themselves. They have a team around nutritionists, sports therapists, physiotherapists, coaches and all that sort of stuff. So it's like they're the ultimately one taking part. And in your scenario, they're probably going to find in the deals, negotiating, but they're bringing it back to the hub really, and have all this support around them to make the deals ultimately stack up and work. Yeah,
exactly that. Because at the start, it was someone asked me to help them how to do it, and I was like, I don't really have a framework to do this. I haven't built nothing. So over time, we've developed. Like I've just brought anyone that I use for my deal team, I bring them in and then add more to it. So like you said, so they're equipped with everything that they need to become successful.
What's cool about that though? You're hanging around with people that have a genuine interest in what you like doing as well, right? So you're just learning from them, they're learning from you, and it's a great environment. I love that.
Yeah, that's what I like about our meetups. Yeah. Like, we do them abroad as well. So when you're
seen the Monaco thing, I was like, talk to Dee about some stuff.
Yeah. No, that was really cool because like it was, that just being in that environment with those people to talk about what they're working on, it's cool. It's like motivational as well. So
can have a paradigm shift for some people, isn't it? Just change of scenery, change of kind of conversation, and you start, okay, it is possible.
Yeah.
Just need to figure out how to put the parts together.
Yeah, do you have a realization definitely when you put yourself in certain like environments?
Yeah, I agree with that.
We good?
Yeah.
I think the last thing for me then, what's next? More deals.
Yeah, more
private
deals.
Equity firm. What's going on?
Well, that's the end goal.
I can see it.
Is like we'd like to like my business partner. He's one of them. He's 50.
Yeah.
He's gone through 3 exits to the biggest private equity firms in the world. So. I'd like us as a collective to have done that over the next, say, like 5-6 years, or at least like one huge exit from one of the groups with one of our op partners to show them we can do it with them. And then the proceeds of that probably like to then be like, right, we're going to create like a 5D fund where we deploy our own capital into the fund. Because I already invest in some of the members' deals. Like if a deal comes up, I've invested in their deals. But I'd like to have like an actual fund, I think, that we're like, look, if your deal fits a certain criteria and we'll underwrite it in-house, then you can use the fund for the capital. That's what I'd like us to get to, just because we get offered so many deals through that group. There's some opportunities that we have no choice to say no to because our capacity is only so much as well. So it'd be a shame to miss some of them in the future. So that's what I'd like to get it to.
Yeah. And there's no reason why you can't do it, you know.
No, we'll do it. We'll do it at some point. Yeah.
No, exciting. We're rooting for you. Anything from yourself, Will?
All good.
Well,
Learned a lot.
Yeah, it's good. Dee, thanks very much for joining us today and come down to our Bath office.
Cheers, guys. It's been awesome, and it'd be cool to see how you grow the podcast.
This podcast was brought to you by Ramsey & White Finance and Property Investors. We specialise in helping property investors fund their deals all across the UK. We also have Ramsey & White Wealth Management, Accountancy and Ramsey & White Estate Agents. I want to say a huge thank you to our sponsors, TF2 Capital, who specialise in bridging and helping clients momentum invest by putting the right finance in place for their projects.